Most traders think NIO is either the next Tesla or the next bankruptcy. But here's the truth. Nobody is telling you. The data shows something completely different. And if you understand it today, you could be years ahead of the market. Hello everyone, and welcome back to Money Move IQ, the channel where smart investors elevate their mindset, their strategy, and their financial future. Today we're diving deep into NIO stock. Not the hype, not the fear, but the real numbers, the real risk, and the real opportunity that traders in the US need to understand right now. Because if you want to win in this market, you must stop trading based on emotion and start trading based on information. So let's break down whether NIO is positioned for an epic comeback or headed down a dangerous road. When you talk about NIO stock, you hear two extreme opinions. 1. NIO is the next Tesla. 2. NIO is going bankrupt. The truth, NIO is neither. It's a company in transition, fighting through massive challenges, but stacking up hidden strengths most traders don't even know exist. NIO's biggest problem today is perception, not capability. The EV sector crashed, Chinese stocks crashed, sentiment died, but fundamentals, margins rising, battery swapping scaling, new models launching, partnerships expanding, all completely ignored by retail fear. Let's clear something up. NIO is not the next Tesla, but that can be a good thing. Tesla succeeded by dominating the US and Europe. NIO's strategy is the exact opposite. Dominate China first, then expand globally. And China is the world's largest EV market, bigger than the US and Europe combined. Here's where most traders get it wrong. Tesla's early years looked exactly like NIO today. Massive cash burn, negative margins, endless skepticism, competition everywhere, stock volatility off the charts. But Tesla didn't win because it had perfect numbers. Tesla won because it had a long-term vision and the patience to execute. NIO's battery swapping ecosystem is its Tesla-level competitive moat. And if that vision plays out, NIO won't be Tesla 2.0, it will be NIO 1.0, something totally different and potentially bigger. To be a smart investor, you must understand the risks, not fear them. Here are the 3 real risks with NIO stock. 1. Cash burn and debt. NIO spends aggressively. It's expanding infrastructure fast, and that costs money. The cash burn is real, but it's decreasing quarter by quarter. 2. The China factor. Geopolitical fear kills the stock every time. But earnings don't lie, deliveries don't lie, margins improving don't lie. 3. Competitive pressure. BYD, Tesla, Xpeng. The EV war is brutal. But like the smartphone market, multiple winners will exist. Your goal isn't to find the one winner. Your goal is to find undervalued opportunity. Now let's talk about the part analysts rarely discuss, but money sees it clearly. Battery swapping. NIO isn't just an EV company. NIO is building an energy company. Battery swapping solves charging time, battery degradation, battery resale, energy grid stress. Imagine pulling into a station and in 3 minutes your battery is replaced, fully charged. Meanwhile, Tesla drivers wait 20 to 40 minutes. That is a massive advantage once scaling hits global levels. This is why NIO has partnerships with Menonine, State Grid, Shell, Cattle. This is why NIO has over 2,270 swap stations. This is why NIO is not a typical EV stock. Now we get into the real upside, the reason long-term investors are watching NIO stock like a hawk. 1. Scaling expansion. New models, new features, new factories. Expansion is accelerating again. 2. Margin recovery. Gross margin rebounding is the single biggest indicator of a future stock rally. 3. Battery as a service, BaaS monthly subscription revenue, recurring income, one of the most powerful business models in the EV industry. 4. NIO's global push. NIO is not stopping at China, Europe, Middle East, potential North America entry. If NIO cracks even 2 major markets, the upside is not priced in whatsoever. This is why early positioning matters. Now let me be clear, this is not financial advice. But here's how smart traders approach NIO stock. Approach number 1, long-term accumulation. If you believe in energy infrastructure, BaaS, and China's EV dominance, models show NIO is undervalued at these levels. Approach number 2. Short-term trading. Volatility is your friend. NIO has predictable patterns, fear drops, news spikes, consolidation ranges. Approach number 3. Catalyst watching. NIO rallies strongest during margin improvements, delivery growth months, government incentives, global expansion announcements. Your job? Stay informed, stay disciplined, stay ahead of the crowd. So, is NIO the next Tesla or the next bankruptcy? The truth is simple. NIO is neither. NIO is a long-term bet on technology, infrastructure, and the future of the EV ecosystem. And for traders who understand strategy over emotion, this is where the real opportunity is built. Thanks for watching Money Move IQ, where smart investors think sharper, act faster, and move smarter. If you got value today, smash that like button, subscribe, and turn on notifications so you never miss a powerful market breakdown. Stay focused, stay disciplined, and as always, keep making money moves.